Welcome to Chapter 18 from Cost Accounting. This chapter covers performance measurements. So, performance measurement usually gets tied to business strategy. The definition of business strategy is here, but it's mostly about what the business is trying to do. What is their purpose? What are they trying to accomplish? And how do they plan to accomplish that? So many businesses have mission statements. Some also have vision statements. These are all part of their strategy plan. So what do they plan to do? How do they plan to make that happen? Why are they even in business in the first place? And what are their goals for maintaining their business, meeting customer demands, etc. So one of the most common management frameworks used for type of businesses is Porter's management framework. And Porter has identified three types of companies that are highly successful. So his three types of companies are cost leaders, product differentiators, and focused competitors. So cost leaders are the lowest cost providers in their market. So their main goal is to search for efficiencies and any ways to lower costs. That's how they generate their profits, by having higher profit margins because they've been able to lower and control their costs. Product differentiators have unique products or products with unique features that people can't get anywhere else or that people are willing to pay a premium for. For example, like Apple is a product differentiator. So people are willing to pay a premium to have Apple products versus PC products or Samsung phones or other kinds of competitor products to Apple. And focused competitors have a niche of some kind. Either their product or their customer base is highly specialized, so they're just really focusing on one area instead of having a very broad product line. So we already have talked a lot about financial performance measures, and you talk about financial performance measures in many classes throughout a business or accounting degree. However, what do we need to do for performance evaluation beyond the accounting numbers? Do our accounting numbers always identify the cause of operational problems? What if the causes of our operational problems aren't financial? What if they're more human relationship in nature? That doesn't always get identified through financial performance measures. Additionally, we might only report financial measures on a quarterly or annual basis. Well, that's not often enough to look at employee performance or to make corrections in employee performance. Additionally, generally only our accountants, maybe our board of directors, maybe other people see the financial results. So not every employee gets to see exactly how their work connects to financial performance measures such as financial ratio analysis and stuff like that. It's not always easy to connect the dots between what a person is doing on a daily basis and what the company's results are as a whole. So we want to create a performance evaluation system that measures a lot of different things. So this has a lot of effectiveness outside of just looking at financial performance measures. So we've talked in previous chapters about how just looking at very specific financial performance measures can create manager motivation that isn't always positive for the company as a whole. So if we include multiple things at multiple different levels, then number one, we reduce that of motivation factor to focus on one single performance measure or one single goal if we're ranked on a wide variety of things. And then at the different levels in the organization, if we get a lot of employees involved and we motivate every employee to hit different things, then we can achieve that goal congruence that we've talked about in another chapter. So here's an example of the Silo Company business model. So their goals for their company are to have happy employees, have high profits, and have happy customers. And so they've developed this business model that looks at how can we achieve that and how do those things connect to each other. So for example, if their operating personnel are trained, they're efficient, they're happy in their place, then they're more likely to give better service to customers, which can then create higher customer satisfaction. Highly satisfied customers become return customers, which then helps us to build revenue and generate higher profits. So how those things connect to each other and benefit each other. One of the performance measurement systems that is highly popular in businesses today is called a balanced scorecard. A balanced scorecard is designed with financial and non-financial measurements. Different measures of performance that can be included on a balanced scorecard include ability to generate profit, which is one of our financial goals. But then we also look at non-financial goals such as employee satisfaction, customer satisfaction, the learning and training and development programs for our employees, how our employees are growing in their skills and development, queue length, so that goes back to customer service. How long do our customers wait for service? How long do they stand in a line or a queue before they get served? And then what are our different location costs and profitabilities? Then we get into that responsibility management where each location has its own costs and potential profitability. So the four components of a balanced scorecard are a financial perspective, customer perspective, learning and growth perspective, and an internal business process perspective. So when we look at the financial perspective, that's where we get into the improving our return, growing our profits, reducing our costs. What different measures are we doing in order to do that? So each company will have a very unique balanced scorecard. If we're thinking about this coffee company that we talked about on a previous slide, we might have in our financial perspective to increase sales by 5% from one quarter to another, or to reduce costs by 10%, or any other various things. Under the customer perspective, we want to have customer satisfaction. We want return customers. We want loyal customers. We could have a wide variety of things for that. We might have a loyalty program. How many customers are signing up for our loyalty program? Can we track return by having a loyalty program? Can we track how often those customers return? Do we have customer surveys that customers will fill out and tell us how satisfied they are with our service? Internal business perspectives is when we're looking at how many orders are filled correctly versus how many orders are canceled or not correctly. We also look at the timing of orders. How long does it take to fulfill our orders? How long does a customer stand in line? How long do our processes take? That even comes down to how long does it take for an employee to walk from the cash register to the coffee machine and create a coffee order to take it back to the customer. So we have to improve efficiencies along all of those internal mechanisms. And then our learning and growth perspective. So what do we do to help our employees become more efficient and be happy in their positions, give customers higher satisfaction, because higher employee satisfaction generally leads to higher customer satisfaction. So, what are our training processes for developing employees, for building their knowledge, for making them happy? What kind of benefit systems might we have? We might also have employee satisfaction surveys that we do in order to generate information for those.